Good morning, traders. I want to do a little pre-market review here. As always, we need to do the risk disclosure statement. Remember that securities, trading futures, contracts involves risk, and it may result in potential losses that are greater than the amount you deposited with your broker. As with any high risk financial product, you should not risk any funds. You cannot afford to lose. We're not risking any funds. Do not put your own money in the market. If you're learning from me, I don't want you putting any money in the market. Not now, not ever. We will get funded by a prop firm, and you can use that money to fund a separate private brokerage account if you want, but it's not even necessary. You can just share the profits with the prop firm from now on, and you don't have to ever trade your own money, ever. I wanted to go over what I look at the beginning of the day. I've got stuff already written down here. But what I do is I start with the daily chart. Let me hide these drawings just for a moment. So I start with the daily chart, and I'm looking for areas. Same thing that you would look for on the larger time frame. You're looking for fair value gaps, things like that. This is one I had drawn out on my chart. There's a fair value gap right here. We traded up to it and stopped and reversed. Well, we haven't taken that one out. It's still in play. This one right here. I can blow that up a little so you can see it. It's right there. That wick, the bottom of that wick to the top of that wick. And if I put my mouse right there on the bottom of that wick, you can see there hasn't been any candle bodies take that out. So it's been respected. That's what you'd call that. But traded through, but respected. So that would be a bearish fair value gap. I turn these back on. You can see I have it marked out here. It's in red. The London stuff is something I use for intraday. You don't really need it here right now. You can see I have it marked in red there, and I've got it labeled. This is the bottom of it, top of it, of course. And I took some trades based on that this week and last. Now, so what are we looking at today? It's going to be a very unique day. So I'm not sure if any of these levels are going to hold. But on the daily, we're down here. We didn't have any fair value gaps here. This wick and that wick are the same. This wick and that wick, they all overlap. If you can tell that. Let me get rid of those drawings again. All of these wicks overlap. There's no gap. That wick and that wick, there's that little gap. So that's what we're looking for. And whenever you're trying to determine a level that the big guys have used in the past as an area where they'd want to go long, I guess, or go short in this case. That's what this level was. The big guys, they'd want to go short right there. They're going to want to protect those positions, so when it gets back up there, they may already have orders sitting there. If we look back, we can see there's some fair value gaps here. There's one from the top of that candle to the bottom of this candle. That's a fair value gap on the daily. That's a powerful signal. And that's what we're trading in right now. The current price at 43.50 is right in the middle of that gap. When I look at that one, and you can also go back a little further, and this one right here is of interest to me because there's a fair value gap right there from the top of that candle to the bottom of that candle. This one right here, we didn't have anything trade into it. We had candles try to take it out. Only the wicks took it out. And the reason it interests me is because the price did come to it one, two, three, four, and then right here would be 5 times. And we're pretty close to it. We're definitely within reach today. I wouldn't be surprised if we trade down to it. When it gets there, it may get taken out or it may do what it did over here and reverse. No way to tell. But with non farm payroll coming out this morning, and then we also have the Fed chair. I'm going to talk about interest rates today, and the market goes absolutely insane during that time. So if you have an opportunity to look at the market today, um, you can see how news affects the algorithms. They're still running, but there's a lot of manual manipulation going on as well. And the price action is just absolutely bizarre how it can move. I've heard stories that these algorithms are actually tuned in to certain words that the Fed speaker says. And based on that word, it'll offer price at a certain level. And so that'll cause it to move around quite a bit while the Fed chair is speaking. I've seen it. I've seen him like say, "Oh well, I think interest rates are improving," and the price just go through the roof. But we're not quite sure yet, and it dropped like a rock. It's just really, really funny how it moves like that. Once we have a level marked out, and I drew this because we are close to here, but that's the only candle that is traded down to there and then reversed. So I think this level right here being hit multiple times is the one that I would think that's where our sell side liquidity is. So there's going to be some orders here that if it breaks that, people are going to want to sell it. And when people sell short, the algorithm is designed to take their money from them. So it'll fill those orders, but then price will go back up, stop them out, and it may continue down. That may be as low as it ever goes, but it'll probably wick underneath there about like it did here. But it could continue down, especially today. So we have a bearish fair value gap here on the daily. And our bullish fair value gap would be right here. I'm going to put a box there so I know where to look for it. And the bottom of it is that green line. I'm just going to put right here. And it'll transfer all the way through all of my charts. Double click it. And I can type in what I'm looking at there. Bullish fair value gap. And I also need to make sure I know that's the daily. The daily chart doesn't show overnight hours. It only shows the regular trading session. So for New York time, that would be from 9:30 to 4. So we can drill down a little closer. Right here, this one occurred on, this one occurred on February 7th. So if I go to the 1 hour and I go back to, man, I'd have to go back a long way. February 7th, I can see that price action on the full 24-hour electronic trading session. You might get a better idea of what's going on. So this would probably be it right there. Now that's the first. That's the first. It's 21st. There possibly. Yeah, there's the 7th right there. So that's a 1 hour look at that fair value gap right here. That's what we were seeing on the daily. And there's a whole bunch more price action there, and then this is part of it as well. So we start there. Yeah, I think that's it. This is it right here, February 1st. Then there's another one right here. This one is the one that it's been respected and traded down to. That's why I'm thinking sell side liquidity is going to be down here. And let's go ahead and get back to where we are now. And you can see we've been selling off quite a bit this morning. And this one, this is the bearish one. See how price trades up to it? It's coming back down. So I would expect it to come down into this, take out some of that liquidity there, like it did here, and then reverse. But I'm going to be very cautious getting into any trades today because of you can see that fair value gap real good on this chart. When it traded back up to it, it respected it. So we could see some of that price action today. But those are the things I look at for my pre-market review. Once you get those levels marked out, I like to monitor in 5 minute. And then when I want to enter my trade, I'll enter it in a 1 minute time frame. You look at this, all this information in a 1 minute. And then as price starts to approach my levels down here, I'll be able to see them. You look for those reversals and whatnot. There's also, every time frame has its own set of fair value gaps. Right here is a big one. On a 1 minute, this is only 1 minute. So if you did a 5 minute, that thing is still going to be there. So from right at the bottom of that candle to the top of that candle, that's a nice fair value gap. We've traded up to that level right there, so that's an important level, and then gone back down. My expectation for what it's going to do right now is just going to consolidate for a little bit. It could push on down before the open, but I think we're probably just going to consolidate for a little while. Just like this is a consolidation. Price just kind of hangs out in one area for a little while. And usually when this is going on, the algorithm is building up orders, lots and lots of orders. Like if people are thinking, oh, this thing is going long now, they may take a long position in one of these spots. And if some are thinking, oh, it's going to go short, they may take a short, and then these things will wick them out. They'll just stop them out, take their money, $100, $200, $300 each time one of those wicks pops up there. And then if they were short here, got stopped out, and then they're like, oh, I don't want to trade, and then boom, the price drops, and they're all frustrated. Believe me, I've been very frustrated because the market went my way, but it stopped me out first. That's what I do every morning. That's my pre-market routine. I look at the daily, sometimes the 4 hour, if it's unclear, and I just drill down to a level where I can get a really clear picture of where price might go, where it might reverse, and that's it. Good luck and happy trading.